Hello everyone. Joining us today is one of our mentors at Savart, Mr. Sridhar. He has an experience of over 22 years in the field of investment and personal finance. Hello sir, it's so good to have you here today.
Yeah, Suraj, it's a pleasure to be here.
So sir, to begin with, we just wanted to understand on your journey of how you found your interest in the field of investment and finance.
Oh, you're taking me to my school days. So typically in my 12th standard vacation,
Okay.
so I had a Guju friend who used to stay in my building, and his parents used to deal in stocks and securities. And with him, he was a very good friend of mine. So with him, we used to go and we used to sit at a broker's place. In those days, people used to go and sit with brokers and they used to do intraday trading and all. So that's how I got initiated into this field. And somehow the concept of money started becoming very interesting for me, and how the markets work. Slowly from there, I started getting exposed to different type of investments, all thanks to my friend. But then eventually, from there I've carried on, and today I've made myself an expert in this field.
Okay, sir, that's nice.
Yeah.
So, just wanted to ask you, just now that you mentioned about way back in your school days, right? So, can you give us a rough timeline of when that time was where you started getting your interest in investment, like a year, rough year, if you can tell us about?
So that was in 1995.
Wow, that's great.
Yeah, so that was like way back. And I did my first stock investing in the year 1998.
Okay.
And so I got initiated, and actually I'm an engineer.
Oh, wow.
So I'm a mechanical engineer. I tried to work for 2 years in the engineering field, but somehow finance was my love, my passion. And I did an MBA in finance from SIBM.
Okay.
And since 2003, I've been in the field of finance.
So how did your journey with Savart start? Like, can you please tell us about that?
Yeah, so actually, I was a visiting faculty at SIBM. I used to teach regarding money and investments.
Sorry to interrupt you, can you tell our viewers like what exactly SIBM stands for?
It is Symbiosis Institute of Business Management,
Okay.
Pune.
Okay.
Right. Yeah, so like I was telling you, I was a visiting faculty, and the deputy director there had become a very good friend of mine, and he shifted to Bennett University as a dean of academics.
Okay.
Shankarsh was a student there in the first year, and he used to talk to this professor friend of mine, and mentioned that he wanted to do something in the field of investing. And I believe Shankarsh had already written a book called as Nirvana then,
Okay.
right? And because Shankarsh was so passionate about this topic and wanted to start something as soon as possible, this professor friend of mine, he got in touch with me, and he asked me that there is a young kid who wants to do something what you are working in. Would you be willing to talk to him and see whether you can help him? And it so happened that I was traveling to Delhi in that time, and I made a visit to the campus. I met Shankarsh, and I just thought I'll talk to him for half an hour, but we ended up talking for 4 hours.
Okay.
And you know what? I saw a reflection of myself in Shankarsh, like when I was his age, and what kind of things that I wanted to do. The same things I could see in Shankarsh. I somehow didn't follow through on those dreams what I had at that point in time. But I thought that why not I contribute to helping Shankarsh execute that dream.
Okay.
And the values that Shankarsh had regarding democratizing investments, so that everybody can invest and make wealth. So the same kind of philosophies even I had. So I saw that as a great opportunity for me to work with Shankarsh and get Savart to the state it is today. So even before Savart was formed, me and Shankarsh, we bonded.
That's nice. That's so good to know about how you've been through the route of how Savart has grown now into such a big organization now.
Right.
So moving forward, sir, people often use this word financial freedom. What exactly is financial freedom according to you?
So when I had started my journey, okay, so there was something called, when people used to say that, I don't need to want to work for money. Okay, I want to work because I'm passionate about something. Okay, so financial freedom enables you to get to that state. Okay, to be really free in life. Okay, the first step to achieving real freedom in life is to become financially free. Once you're financially free, then you're not tied down to doing things to sustain yourself in life. Okay, because your regular lifestyle is taken care by whatever corpus you have built. Okay, you have all the free time in the world. You are not stuck to some job to sustain your life. With that free time, you can actually if you have a dream in life, you can start living that dream. So a state of financial freedom is a state where you don't need to worry about money or work for money.
Okay.
Your money works for you, and then you do what you want in your life.
That's really nice, sir. So, sir, you have an experience of about 2 decades in the field of financial planning. So, what experiences have shaped you or your expertise in the field of financial planning?
Okay, so typically between when I started off in around 2001, 2002 period, so that's the time when this bull run had happened.
Yes.
Okay, the Sensex or the markets, so Sensex was at around 2,800. From there, it went to 21,000. So almost like 8 times kind of a growth. Okay, people made tons and tons of money. Between I think 2004, 2005, 2006, markets were up 30, 30, 30, 40%. Okay, that was the time when mutual fund investments were also doing fantastic. And I had few of my clients who made like phenomenal returns. They made like 50% return in a year and stuff. And even when we used to do these review meetings at the end of a year to take a review of the entire portfolio, what I found was the client was looking at, oh, we made only 50% return. That other fund has given me was giving 70%. Why didn't we invest in that fund? Okay, so this kind of questions I was faced with, and then I started questioning that what am I doing? Am I in the right field? Even if after giving 50% return, if a client is not happy, then when will a client be happy? So I started questioning. Okay, so this questioning, it eventually it's like a soul searching that I've done. And what I found out is that why do people need money? Okay, of course return is required. Once that return comes, you're creating some corpus. Okay, so
Yes.
what is the purpose of that corpus? So by this questioning, I found out this money is finally going to be used for some objective, some goal. Okay, maybe for your child's education, for maybe your retirement. Okay, so that was the purpose of this money. So from that point in time, I stumbled upon a field which is called as financial planning. I have no formal training in this field.
Okay.
Okay, so every money I started linking to its final purpose. And doing this questioning, this soul searching, a lot of clarity came. And then I started talking to my clients, and I started explaining to them that why are you so much focused on the return part? As long as you have enough money to take care of your need or your goal, I think you should be happy. Finally, money is just a means to an end. Okay, once you have the money to take care of your goal, then you are you can be really happy about achieving that goal. So I de-linked the concept of return from the investor's mind, and I made them focus on achieving their goals.
Okay.
And this questioning is where the field of financial planning has been built.
So, sir, do you think everyone needs to have a financial plan? And if you think, then why? What is the reason behind it?
See, I think there's a common saying which says failing to plan is planning to fail.
Yes.
Okay, uh, the awareness level regarding financial planning is so poor in our country. Okay, I believe that in schools, right from maybe third, fourth standard, people or the kids should be taught about money management. Maybe whatever you do in your life, whether you become a financial expert, you become a financial professional, whether you are a doctor, whether you are a rickshawala, whether you are a chai wala, whomever you may be, you have to deal with money. Everybody needs money in their life to sustain. Okay, so the concept that only studying about money, the finance guy should study about money, is something which I don't understand. Everybody needs to be knowledgeable about money. Nowadays, you can look at so many financial frauds which are happening.
Yes.
Why are people getting fooled? Where maybe they're just losing in lakhs just by clicking on a button. This is because of lack of financial awareness. Okay, everybody needs to become financially aware. Everybody needs to understand how money is managed. And I think one of the best ways to be disciplined and get on track to set your financial life is to do a financial plan. Either you do it yourself or you go to a professional.
I really hope listening to you over here, our viewers can inculcate this in their daily lives and can have a different outlook towards things, sir.
Sure.
Anyways, so moving ahead, sir. In general, why do you think people do not have financial plans? Like now that you just mentioned that India is one of the countries where people do not as such have great financial planning going on. Why do you think, like, is there a particular reason behind it?
First of all, there's a lot of information available regarding, investing, money management, different financial products. Like you just go anywhere and you'll see hoardings. You open any website, you will see ads. Okay, so much of over information is there, okay, which is hitting people. And so typically people tend to choose the easiest path. Whatever is there in front of them, they'll just go and they'll take. So without any thinking, without any awareness, they are taking certain decisions regarding money. Okay, and that is what they believe is financial planning. So people think that they are already planning for their finances, but actually they are not.
So to keep it simple, would you like to say that it's like the lack of knowledge or awareness?
Lack of awareness, lack of focus, lack of clarity of where they want to go.
Okay.
And typically so much of over information, and also a lot of they getting hit by so many different people trying to sell so many different financial products. Like I believe even you would be receiving at least one call a day.
Yeah, I'm sure. Yeah.
Either selling a loan, either selling an insurance product, you name it, and you'll keep getting calls.
And I feel it even forms a lot of confusion in a person's mind as well, right? I mean, they don't have a clear picture about what they want because of so much of information.
Yeah, it does create confusion, and a person is not able to evaluate the difference between a product seller and an advisor. So typically what happens is the people whom you encounter in your life typically are people who are selling you products.
Yes.
Okay. The people who are selling you a product will earn by selling you the product. So they want to sell you more and more and more products. They want to keep on doing more and more transactions.
Yeah.
Right. But a planner doesn't want to just sell you product. Okay. The product is a means to an end for a planner. Okay. He will use a product to help you reach an objective. Okay. And a true planner will typically charge you a fee for giving the advice, and then give you the right products so that you can meet your objectives or your goals in life. Maybe that's being financially free.
So, sir, as you're just mentioning about the information that is out there about finances and all of that, and I've heard that Savart has started Nirvana. So how do you think Nirvana is different from all the other information?
There are 4 asset classes that a normal investor invests in. Okay, so typically debt, equity, commodities, and real estate. Okay. So each of these asset classes has a certain amount of return, which they can deliver, and they have a certain level of risk. Okay. Most investors are not really completely aware of it. Okay. Most Indian investors know about debt, they know about real estate, and of course gold not as a investment, but they buy it for jewelry. And very few people are really understanding how the equity markets work. Okay. So at Savart, what we will do is we will demystify all these investments. Okay, help people understand how the investing needs to happen. Finally, we need to understand that investing is a very long-term activity, and if you take the right decisions, it can help a person create a lot of wealth. So Nirvana is going to be geared up to help people create that wealth.
Thank you so much for giving us a gist of what Nirvana is actually going to be and what it is aiming to go for, like where it is aiming to go. So if you may pick one or two, what are the most common financial mistakes that you have observed among the individuals, and what is your advice to avoid these mistakes?
So one of the most important mistakes that people do is they do not take enough risk. Okay, what do I mean by not taking enough risk? Okay, typically most people would not want to invest into equities. Why? Because they feel that it is gambling, or that because their parents have told them, or whatever the perceptions that have got created. If you do not invest into equities, then the other asset classes, like I had mentioned, the other 3 asset classes, other than land, all other asset classes will not give you more than inflation returns. Okay. If your investment horizons, like somebody who's maybe 30, 35 years of age, they have a next 30, 40, 50 years of investing life left. The money which is going to be there, some part of it is always going to remain invested. Yeah. So a long-term money, if they are going to grow at the rate of inflation, if they are put into these 3 asset classes which I was mentioning, other than land, okay, then the money will grow at inflation, and that will not create enough corpus for them to be able to be financially free, or even create a retirement corpus which is sufficient to take care of their current lifestyles. Yeah. Right. So if they have to create that corpus, then they do not have an option but other than investing into equities. They have to invest into equities. Okay, so
Wow.
the first mistake people make is not invest money into equities. And the second mistake, what I've observed investors looking at is quick returns. The people who are chasing quick returns eventually end up making huge mistakes, okay, where even their principal gets hurt. So from where this quick return concept has come, okay. So all these ads, you will see a lot of, promotions, a lot of people, investors coming on, or these advisors coming and talking on these news channels, business channels, everybody is geared towards helping a person do more transactions. Why? The more the transactions, the more the revenues these companies make, okay. And they have tried to create a perception that if you do more transactions, you can end up with more returns. And people, everybody wants high return.
Yeah.
Being attracted to that high return, they feel that if they do more transactions, that is trading, they'll make high returns. But believe me, almost 90% of the people will lose money if they go into this trading concept. So typically, how should people, avoid these mistakes? Okay. One is get educated, where Nirvana will definitely play a fantastic role. Okay. And typically, you need to create a plan. Okay, investing is not a short term activity. It is not something, you do a investing one time and you make a quick return. That is not what investing is about. Investing is a lifelong journey. So you treat investment not as a one time activity or a short term activity. You treat investing as a lifelong activity. Okay, so once you get that perspective, then you can really take right investment decisions. You can take that in two perspectives. And second is, have a reasonable expectation. Okay, anywhere you are going to get quick returns, I think you need to be really, it's a red flag, and you need to be really careful. Okay, so typically, what is a reasonable expectation? Okay, and how do you benchmark that? So one of the benchmarks that you can use to estimate reasonable expectation, return expectation, is inflation. Okay, so most fixed instruments, okay, maybe it is a bank FD or LICs or your gold or those type of investments, will give you inflation kind of returns. Okay, the only two places where you can make slightly higher return is, one is in land. Of course, there the risk is higher. So if you can understand how to manage those risks, you can make slightly higher returns. And second is equities. Okay, a return of maybe two times of inflation is something which is possible through equities if you invest over the long run. Okay, so as the inflation will keep coming down, the returns from equities will also keep coming down. So if you have reasonable expectations, the probability of making mistakes will be lower.
So, but nowadays we are hearing a lot about financial frauds, right? So many companies are getting involved in financial frauds. Do you think quick returns is one of the reasons, like expecting for quick returns is one of the reasons behind so many financial frauds happening?
Yes, of course. That's what I'm saying. This they need to be educated. They need to really understand how their financial life is going to move, how different investment options work. This financial literacy is so important. Hence, I say even school children should be introduced for school children.
Okay, so that's really good to know. So you're playing, I mean, I've heard that you're playing a key role in setting up the personal finance division at Savart. Could you please provide an overview of what personal finance entails?
Yeah, this was a very good question that you have asked. Okay, it has always been my personal dream that we can get to a state where we can provide a comprehensive service to an investor. Once a person comes to us, then they need not think or worry about money or decisions regarding money, okay, or any financial decision that they take. We are going to be there to provide them with insights, help them take the right decisions, which is going to take them to a state of financial freedom. And we want to shorten that journey. If a person would have been managing probably the money on their own, okay, maybe it would have taken them 20 years to be financially free. But with a professional advice, we can maybe cut it down by maybe 3, 4, 5 years. And the value of 5 years, if somebody can be financially free 5 years earlier, right, I think it's something. Okay, we will help them take all the decisions which are needed to help them achieve financial freedom. Be it planning for your risk, under risk, your life insurance cover. How many people really know how much life insurance cover is required? Okay, so typically most people would have 20, 30, 40 lakhs kind of life covers. Do you think that this money is sufficient to take care of the family if you go? So we will help you plan in the right way for that. About medical insurance, okay, about having an emergency fund. If you are buying a asset, maybe it's a property, maybe it's a car, we can help you take better decisions. How much is the affordability? how you should finance this asset purchase. Okay. And if there is a loan, then should you prepay your loan or should you continue with your loan? Maybe a little bit of taxation advice. Okay. How your asset allocation should be planned. How you can reach that state of financial freedom in the shortest possible time. This is what we aspire to do at Personal Finance.
Okay, sir.
So a person can really have a peaceful journey towards achieving financial freedom.
Hope this interview has provided our viewers with better insights on financial planning and personal finance. Thank you for sharing us your valuable time, sir.
Thank you, Suraj, for having me here. It was a pleasure.